Hello, everyone, and welcome back for the post-market session with Sunil Sharma. And let's do the analysis right now on the S&P. First, we'll start with the Google to understand the S&P action. We had an earning just now. The stock shoot up about 5%. This is what we are looking at, about 4.47% jump. This is what we were looking at. So if you see here, someone asked on the stock tweet as well, 5.5%. Someone asked in the group, Rory asked what's the thought. So I said 5.5% plus means we were looking for the jump. I was bullish on the stock, but I did not take a trade. The reason to not to take a trade on the Google was S&PY was at a very crucial point, and that's why I let it go. But I knew it. The stock was bullish, and we were looking for 5.5% because of the straddle data. So moving forward, let's come here. Why we were looking for the bullish? As you clearly see that there is a first positive angle we had on 21st of April. So the first positive angle on the daily chart, wave number 1, wave number 2, we were in wave number 3. This was the first point we were looking at 161.33. The price has already crossed, so we have a minor change of character right here. We are in a bullish trend now. Then this particular once after this earning, right now the price is 165. Will retest here 170 area, 200 EMA will break out and continuously to the price of control line 191. So if you are holding the stock or if you are opening any position, look for 191 to exit the position. This is where the stock is heading, 191. And what also made us to look in this stock to be bullish, this particular transaction happened on the unusual option. So someone on today, 24th of April at 353, right before the earning, right before the market close, 7 minutes before the market close, someone purchased right here $12.6 million worth of call. You see that? 17th of July 2027, 155 at the money call, roughly, because the stock was trading at 160 area. He was buying a little bit of in the money, 1%. In the money call for June 2027, and someone is putting over $12.6 million, right 8 minutes before the market close. So this was most likely someone insider trader, someone who knows the earning, someone from the company. This is how it looks on the unusual option. So looking at this trade 8 minutes before, I knew where the market will jump, and this is what happened, 165. Now let's jump to the S&P 500. S&P 500, if you go to 30-minute time frame, this was the reason that I did not take any trade on Google, because you see that on a key point equal high on a 30-minute time frame, we had a red candle price spinning, and then another green candle, but the price was spinning. So there was most likely this was the point for the price to fall back into 530 area. This was the reason for me not to open a trade on Google, because this is the range downside. I was looking at 200 EMA retest and continue upwards. So when the market is at a critical point, doesn't matter how what your conviction level is, you are 100% sure the stock will go up, still you need to let the opportunity go. There is no need to be greedy on trade like Google when the market is at a very peculiar point. So that's why we let it go. This particular candle, last 30-minute candle, if you see that inverted hammer, the big candle right here, it's also known as awareness marubazo. So this particular candle is formed on S&P 500 solely because of Google. There is no other reason for this candle, and that's why. So tomorrow we'll be watching the market. Tomorrow is Friday, again very critical day, last Friday of the week. This is when generally institutions take out money from the market, because they don't want to hold in the last week, Friday, Saturday, Sunday, because they have to pay a lot of interest. They do not have all the cash. They borrow the money from the central bank and invest. So that's the reason that on Friday they generally pull out the money from the market. So right now the market got saved by the Google earning, but still there is a little bit of risk for tomorrow and Monday morning. So I'll be careful. We are covered on every single position, and that's how the way forward. At least until Monday market close, we have to be covered. We have to be careful for next 48 hours. So this is S&P 500. I would take a little bit of pullback in this, maybe tomorrow afternoon, tomorrow after 12:30, or Monday. I need a pullback on S&P 500 here. That's the right way. At least to this point, 538, 539. So about $8 drop right here. This is what we are looking for, 1.5% drop. So we need that, about 1.5% drop to continue the wave 5. So moving forward, let's go to Bitcoin, and then we go to some other stocks. So Bitcoin right here, Again, very crucial point for the Bitcoin. If you see that there is the price was dropping in the falling wedge, and which is supposed to the price to go up, and that's what exactly happened. But now we are in again very critical point. We are in the rising wedge on the 30-minute time frame. We are also in this form where the price was consolidating. If you look on the left, this was the area where the price was consolidating, and we are back in this area. So right in this area, heading into weekend. So practically, if I'm looking for a trade, I'm looking for a pullback right here in this area, 91,685. This is the area that's where we need Bitcoin to continue the upward momentum. Unless some news come from the government, Bitcoin buy or something like that, it can continue. But at this point, I'm looking for a pullback, a little bit pullback. It's not a big pullback. It's just like $1,800 to $2,000. So a little bit pullback here and then shoot up, break this high again, like 95, and go in a 95 to 99 area. So to go to 99, I'm looking for Bitcoin to pull back in 91 area and then go to 99,000. So this is the expected path, a drop here in the falling wedge and then continue the upward momentum. Dogecoin, we are at 18 cents now. We're very close to our break-even point. We'll be holding our position. We are not looking to give up our token on the Dogecoin unless it's double our investment. At least we are looking for 100% return on this one. So we'll continue holding. Solana situation is same. Those who are long in Solana, continue holding, continue buying every dip. This is the kind of token that you want to buy every dip. So whenever you see a little bit of drop on this trend line right here, 147 area, you buy reversal in the 147 area, you buy again in 145 area. So let's move back to the stocks. Some stocks we need. We have adjusted our hood trade, as everybody knows. We booked the multiple profit on this. So now what we are holding? We are holding $46 short call, and we are holding for $60 short put. So situation is, despite our $46 call is at loss, but the best part is if the stock will continue going upward, we are 100% hedged, and there will be $1.99 profit per share. So that's the reason that we have a $60 put and $46 call, because the premium is $14. So from 46 plus 14 is equal to $60. So there is a zero chance that we can lose money on that one. Okay, so that's why $46 short call and $60 short put. So this is what we are holding. We went covered on GME today. We added the protective put right in the day after, right here when the price was trading in this area, 27.45, and this is it working for us. Our put are in profit. So tomorrow morning, most likely we'll close the put for profit. We have seen now, we have found the trend line. We have also found the inverted head and shoulder base here. So we can book the profit on the protective put tomorrow, and then we'll let the stock ride. Because this week, I'm expecting some news, may possible tomorrow. It was expected today because of the CEO tweet, but we didn't get any news. So let's see if tomorrow we'll be closing our protective put and let it go up, continue. So GME, we are bullish. SNPY and Bitcoin, we are looking for a little bit of pullback. Moving forward, the Hive, what we have done today is, instead of average out our position, we have shorted the put for a long expiry, like a leap put for 2027. And collect the money on that put. So that was a good move. Instead of putting more money in the market, you just sell the put further out for 2 years. No matter what, that is not going in a loss. Coin, we were right when it was trading here. If you have been watching all the previous videos, then right when it was trading, we knew where it's heading, and that's where we are going. So right here in 142 area, we were looking for 2 to 6, and this is the area. Still wait for this price target. This is what we are looking at. We are not covering on Connell. We are not covering on coin. This is the price we are waiting for, and this is where it's happening. If you look at the TMA cross on daily chart, when something happens on daily chart analysis, then it means we are looking for 4 to 6 to 8 weeks time frame. So this price from 200 to 226, it will take next few days. And the reason being, the earning is coming. The best part here on coin, last quarter, if you remember, the earning, the record breaking, but that was sell the news. So this time it will not be sell the news. This time it will recover because it's already been oversold for last few weeks. So this is the time. And in fact, I'll give you the example. When I tweeted on the last time on coin, someone attacked right away on stock tweets. No, they will blow the earning and it will go to $1,000. I said, no, that's not how market works. Market factor the earning beforehand, and that's the reason now this is rising, because market knows the earning is going to be good. So if it's going, if it reaches 226 before earning, I'll be going covered. If it doesn't reach this one, then I'll be taking a long position, because we are looking at this as a first price target. If you are looking for maximum, someone asked the question today that what maximum side we are looking for, 310 plus. So this is the upside we are looking at. So if I highlight the box for you, this is the range we are looking at. From the supply demand, no volume above 349, 310 to 349 anyway will mark the double top, and the stock will pull back again. It's not going to break out 349. It will not break this point. Forget about that. It's not going to happen. It will break this point. Most likely, we will not even see 310. Most likely, we will see this one, 302 area or 293, plus minus in this area. This is the range we are looking at. There is a SR interchange. I can see that this area particularly, I would be interested. This is the area that we'll be looking to take closeout position, 298, 299 area. That's the maximum I would look for. So this is coin. Let's move forward to NVIDIA. What's going on? On the daily chart, we are bullish. We have the first positive angle on the stock. So it will continue rising from here as we have our NVIDIA position as well. Take the triangle right here. If you look at, we have the trend confirmation. So the market has turned bullish. And if you want to see the channel, this is how you draw the channel right here. So this what makes your channel right here. So this is the channel we are looking at. So if you look at 115 price target, this is where the price is heading. 115 within the channel, moving forward right at this 139 on the point of control. So it will continue inclining in this area right here, up, down, reach to 140 area. And then we'll have a further analysis once we reach 239 area. Then we'll see what's going to happen next. Which kind of pattern will be formed. But this is the area that we should be looking to target right now. Right here, this is the area that you should be looking. 140 area, 139 plus. This is the area that we are looking at. So eventually you see the price going upward right here into earning. So earning is coming on 28th of May. Before that, you will definitely see 140 right here in this area. Okay, moving forward, SMCI, we went protective on 30-minute time frame. Stock is bullish. We are looking for upside, but for a short term, there could be a reversal. If you look at the fractal and we are already in the supply area, the blue area right here. We have a fractal 3 candle spinning right here. It should give us an indication that the price is about to sell off. So we have a short put for $65, collected the premium of $32 something. Our break even is $32. We are already in profit in this trade. But we added a protective put on this, because if this drop back into 32, 33 area, this is the area that point of interest. This is the area. If it drops in this area, the at the money put will make the dollar for us. So this is the area that from the short put, we went to the spread now, bull put spread. So we are in bull put spread in this area. We are holding that. Once the price drop in 22, 23 area, 200 EMA or the trend line right here, from 32 to 33, $1 range in this box, we'll be closing our protective put for the profit, and we'll continue holding the long short put, the $65 put. Moving forward, let's look at the WIX. And this is also the reason that I did not take a trade, because WIX has been continuously forming double bottom pattern right here. So right here, this was the point. The market was continuously making it double bottom number 1, bottom number 2, again making bottom number 1 from here, bottom number 2 here. So this was the reason not to take any long trade. You see that the dotted green line, this is the point it's pointing to, double bottom. This is the neckline here, 32. So it's not very far. Next few days, you will see the WIX to shoot up. You see that the entire bigger pattern from here, bottom number 1 here, bottom number 2 here. It's pointing that, hey, the trend is about to reversal on the WIX. When the WIX reversal happen, S&PY will start selling off. And this is the reason that we went protective and we did not trade Google earning. So overall, if you look at, the problem is not with the market. Problem is with the WIX, because WIX has been dropping and WIX has to rise now. Once WIX start rising, look at this one. Zigzag pattern, we are sitting at the bottom right here. So there are multiple bullish indicator on the WIX. Point number 1, the baseline of the falling wedge. Point number 3, multiple low here, equal low. Point number 3, double bottom here. Everything is pointing the WIX will jump. There is no volume on the VRVP. If you look at, there is no volume below this. So the VIX has nowhere to go other than upside from here. So if the VIX started recovering, market will start selling. That's the point. And the minimum, it will come to this area. First, it will retest this neckline of the falling wedge. So this is it. It will 100%. It will come in this area. Nobody can change that. It will come to this area, 27.45. Then whether it will break out or a rejection. If it break out, then it will retest. If it rejection, then it will pull back into the third bottom. Bottom number 1, bottom number 2, bottom number 3. So VIX from here will have a $2 to $3 jump in this area, and then it will be a make or break point. Whether we will be watching this point, whether it's going to a breakout or it's a rejection. If it's a rejection, we'll be looking for 3 bottom. If it's a breakout, then we'll be looking for retest, and we'll be buying put on S&P 500. That's all for today. Thank you so much for tuning in. If you have any question, put it in a comment box and I will reply. Thank you.